One renowned retirement expert and former Goldman Sachs banker is stepping forward and revealing his number one way to beat inflation. It's a way to receive a nearly 10% yield from the government with virtually no risk. Folks who take the three simple steps he's sharing right now could receive nearly $1,500 from the US Treasury in as little as a few months. Best of all, it's guaranteed by law, and you could pay zero taxes on this low-risk investment. Consider how rapidly inflation continues to soar. You don't want to waste any time missing out on the potential profits he believes are in store for this investment. To get a copy of his new free report with all the details, simply go to beatinflationreport.com. Again, that's beatinflationreport.com for a free copy of his new report.
Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is Thursday, the 21st of July, 2022, and I got a very special guest for you. A name that you've heard of, somebody you've seen for many, many years, a legend here at Stansberry Research, none other than Doc Eifrig. Doc's going to come on and talk about one of the greatest opportunities he's seen in a long time, an opportunity that during this market pullback could be a buying opportunity we may not see again. He's melding together his expertise as a doctor. He's a true doctor. And the stock market, health and wealth coming together. That big interview right now with Doc Eifrig. Once again, as I mentioned, good friend, a mentor, I'll call him, somebody I've looked up to for a long time, Doc Eifrig, live in studio. We have him here. We've had a few run-ins over the years halfway across the world. You and I had a couple of run-ins. Yeah. We won't tell that story, but a few stories. But let me give you a little intro of who I'm sitting next to here and who you're watching. You know, Doc received his BA from Carleton College in Minnesota. Then he went on to earn his MBA from Northwestern University's Kellogg School of Management, one of the best schools out there. Then he went to become an elite derivatives trader at Goldman Sachs, obviously one of the largest firms on Wall Street. Spent a decade on Wall Street with several major institutions, including Chase Manhattan. But just like me and a lot of others that work here, he was sick of the greed and hypocrisy of Wall Street. So he quit his senior vice president position and, get this, became a doctor. We don't just call him Doc for the hell of it. He's truly a doctor. He graduated from Columbia University's pre-med program, eventually earned his MD from UNC, University of North Carolina, Chapel Hill, my favorite basketball team, by the way. Then he completed a research fellowship in molecular genetics at Duke University, the big rival, and became a board-eligible eye surgeon. And then, of course, frustrated again as Doc was with the conflicts in medicine, he joined Stansberry Research to look for ways that he could talk directly to individuals like you and I to use his background to help show how to take control of both health and wealth. Thank you so much for joining the show for the first time, Doc.
Matt, thanks for having me. And you left out one thing. Well, there's a whole bunch of things I could dive into, but the one thing I also have, and this is me shilling for my winery, I do have a winery business, which I'm not saying I'm going to retire and do that, but it's a fun side hobby as well that I'm also doing. And the thing I have over you is nothing. It's one of our conversations with a group. It has to do with inflation and Fed stuff, but that's another story for time, and I'll try to hold it over as long as I can, at least till we get through today.
I'm not a wine snob. I like what I like, so I'm a bit picky. And I remember the first time I got your wine a few years ago, I bought a case. I took it home to my ex, and she's extremely picky, and we loved it. We went through that case so fast. So I will say, folks, I mean, it is one of the better wines I've ever had. I'm not just saying as you're sitting there. It truly is a great wine. Yeah. All right, so everybody here knows who you are for the most part. We all know that. But tell me how you got to Stansberry, Wall Street doctor, now sitting here with me.
Yeah, sure. So the short version, and really try to make it short because it's a long story, but I had a little brother who lived in an apartment building that Porter had lived in. Porter moved out. My little brother moved into that space. And in there, my brother started getting connected with some of the folks, and Porter came back to party with that it was a 3-person apartment. And my brother mentioned me to Porter, and Porter was like, oh my gosh, we want this guy to write for us or a story. And Porter tried to get me to be his biotech analyst. And at the time I was just starting residency in ophthalmology. And of course, who's this guy? It's my little baby brother. Like, come on, these guys are partying in Miami. I'll stay in ophthalmology. And Porter and I, the first time we talked, it was literally over 3 hours. Both of our cell phones went dead. We had to go I went back to the lab at Duke. He went back to his room. I think he was in Seattle. He was doing some biotech stuff and snooping up there. And we talked for about 3 hours the first time. And I told him stories. He said, Doc, you've got to share those stories with my readers. And I'm like, okay. He says, no, I'll pay you. Like, you can write them. I said, nah, you haven't seen my writing. I don't think you want to. But eventually he convinced me once every 2 weeks while I was in residency, I would send these ideas of what I wanted to write about. They would sort of approve the ideas, and I would try to write a draft, and they made me better a writer. And that's kind of where it began, the relationship. So they were called SNA health reports. They're buried in the archives somewhere, and that was kind of a fun thing. And then eventually, as I was leaving residency, about to go and become a cataract surgeon, cataract cowboy, Porter's made me an offer I couldn't refuse, which was about writing and the power of the pen. And so at that time, I had 2.5 years of doing this, been to a couple meetings where people came up to me, said my advice had changed their lives. I was so excited. I just couldn't resist. And, Porter, as you know, is a wonderful thinker and intellect and writer. And I had learned so much writing. I was like, doesn't matter what you do, right? And finance and everything, it's opportunity, sunk cost. You just can do what you're doing now or going forward. So it was a really fun opportunity for me. And, you wouldn't get a chance to be on stage like this and, being in Vegas on stage. I've even done my own little stupid magic tricks on stage in Vegas.
I've seen them.
So anyway, that's the short version.
Were you picking stocks originally then, or were you just kind of doing big picture health?
No. It was more truly personal health. Like, here's what happens if one of my early stories is about stroke, blueberries. Mike Palmer, one of our chief copywriter and a partner in the business, will tell you that's one of the great essays I've ever written. The stuff on stroke was how frustrated I felt, where they weren't treating stroke as a true brain attack. And I was being told, oh, you're a third-year medical student, go away, go suture somebody else up in this, I'm like, no, this is like they need aspirin or they need TPA, which is what they use in heart attacks to unclog the vessels. Like, and, the head of the ER was like, get out of here, you're a medical student, what do you know? And that frustrated me. So it was those kinds of stories, but it was definitely not stock picking. No.
So this kind of takes me off topic here a little bit, but what you just said there, I think is a lot of what we do here at Stansberry. I think we pride ourselves in. We think outside the box. The mainstream medicine was telling you one thing, hey, go do your sutures, where Wall Street, I should say, tells people on Main Street, this is how you should invest. Don't change it. Right. Where we come out and we use our experience and our expertise and our research and say, hey, you don't have to do it that way anymore.
This is not true. This is not really what's happening. Exactly. No, you saw the similarity, and it was an obvious metaphor for me of my life, as you said in my introduction. To be on Wall Street and see the corruption, go into medicine and see the pressures of other things beyond actually helping an individual. It was like, wow, I really can help the individual with my pen, and people will listen to this stuff, and it's backed up by my experience, background, research. So
it actually all makes sense, because when you first look at it, it's like, how the hell did he get here? But it truly does. You've been an outside the box thinker your whole life, I would assume, and it just led to this. And being able to meld probably two of your passions together is quite amazing.
Thank you.
So you and I both lived through several bear markets, being in the market. I started in 2000 as a stockbroker. Recessions, we lived through it all. We're in the midst of a bear market now, recession, depending on who you ask, possibly. How do you view this versus ones in the past?
Yeah, I think that's a great question, and it's hard to answer, only because I don't like to do really a whole lot of predictions. But compared to the past, to me, it reminds me a lot of what I think happened in the 70s. And, folks who are old enough to know, or if you're a student of history, you can look back and see there were these stocks then called the Nifty 50 that I was in junior high, high schoolish, and my parents of my friends had. And I remember vividly one Christmas holiday around that time party, and the owner of the home was serving margaritas around Christmas, and it struck, every time I have a margarita, I think of that party because all the adults, first of all, the kids, we weren't drinking margaritas, but it was weird that people were drinking margaritas at Christmas time. I was sitting there listening to them, and you could hear it. Everyone was complaining about stocks and investments and how bad and how terrible things were. Inflation was high. The Federal Reserve was, behind the eight ball trying to catch up. I feel like that it's hard to say. I've not heard that at parties, and I haven't been around margarita drinkers complaining about their investments, but it feels like that from a statistical point of view, as what the market's doing and what interest rates are doing. I would turn the tables on you. What do you liken it to in your?
Well, I would say, I was born in 76. So I wasn't around, but I'm a student, of history, especially when it comes to stock market. But what you said resonates with me because I just did a show last week and I did a rant about how negative people are. And I feel like, especially here in the US, it's a bit of a self-fulfilling prophecy. Even people who maybe pay a couple extra bucks at the tank or out dinner, I notice it too. It didn't really bother me at first. But if you ask somebody now, hey, how's your summer going? My friends would say, hey, we just got back from the beach. The kids had a great time. Now it's, how's your summer? Oh, the gas prices are so high. The food was so high. I feel like we're creating, there's inflation out there. I'm not saying there isn't. But I think we're creating something worse. And I just get this negative connotation when I just got off a flight this morning. People bitching and moaning, just like it wears on you to a point where you don't want to make an investment. It's not that you're bearish, but you get kind of scared, don't you?
Right. Yeah, for sure. That's your amygdala and your brain firing. You want to be with the herd, and if the herd is complaining and selling, you kind of get stuck in that versus stepping out on your own. I think there's more to come as well, and I feel like the worry that I have is you're part of a group email that comes out maybe once a week or so, and there's one guy in our group who was calling the top in inflation when it hit 3.5%, 4%, and now with a 9.1 print last week, are we close to the top? And I think the moment he taps out, then I'm going to say, all right, the top's in. And he hasn't tapped out yet. No, inflation's not real. And I'm like, oh, my large New York style pizza that was $25 is now $45. I don't believe and trust institutions like the Fed that they know what they're doing. Obviously, the quotes and stuff from even 6 months ago, what are these guys doing, right? I don't think they're paying attention to history or looking at the numbers or out filling their own tanks. So I think there's more to come on the inflation side, and that using discount cash flow models changes current valuation. But I think for me, it makes this time a really great opportunity for individual stock picking who are thinking about this and investing in companies where they can raise prices themselves, and so they can cover that inflation, and so their margins don't change, or even they grab market share because the other pizza parlor can't get work and employees and they shut down, and now that pizza guy or whomever, whatever the metaphor business is, now has got more profit. So I think that's stuff that I'm looking for and trying to find. And I imagine
so you see some opportunity, because I just had lunch with one of our copywriters, and me from an entrepreneurial standpoint, you're obviously a very successful entrepreneur as well in a lot of different areas, that I see opportunity here. I'm not calling it top inflation. I'm not calling it bottom in the market, but looking out for the next couple of years, I see a great opportunity because a lot of companies, like you said, won't make it through this, which creates opportunity for those of us that have some cash willing to do it. And that does lead to the stock market. So are there certain areas in the market now that you look at, or are you just looking at individual stocks?
Yeah, so in a macro kind of way, the one sector that I am following now, and we're launching this new product where I've got Tom Carroll, another guy, John Engel. These guys have worked in this industry and business in a 10,000 feet view, down in the trenches view. And this is something that's a very defensive sector. It's a sector where the top 10 market cap companies in that business could buy the whole rest of the business. So that's exciting because you can use them to signal which smaller companies you should be paying attention to.
So I'm looking at one of your studies here that you did that your team gave me, and it said it's a study of 49 industry groups going back to 1926. And they found that this industry that we're referring to is the single best hedge against inflation anywhere in the markets, twice as good as gold. I think gold's the worst investment in the history of everything, but twice as good as gold. I mean, and that says something. You're looking at basically a century worth of data. And in times of, inflation is going to be around for a while. We're not going to go back to 2 anytime soon. So when you're talking about this sector, I don't know if we want to reveal or not, that's up to you, but are you looking at some of the small mid cap versus those 10 big ones, or would you mix those together?
Yeah, that's a great question. And kind of I don't know how much my team told you and how much you've read ahead of time, but it's a great setup. We're actually doing both. We're coming up with a portfolio pick of 7, what I would call larger players, big cap. And then we're giving people 3, what I would call really micro, well, they're small cap, but opportunities that we think would be moonshots, if you want to call them that. I think in the marketing that we've done for that, we say these are 3 possible 1,000+% gainers, and we truly believe that. Like you know me for a while now, and I don't say that without evidence and proof that it's possible. And the technology of those 3 is really, really cool and exciting. And the 7, like Tom Carroll sort of studies this macro stuff, and he and I wrestled over which of the stocks should be in that 7 portfolio, and John and I and the smaller stuff. And it was just such a fun wrestling match that opened my eyes up to the incredible opportunity. So yeah, and I don't know, are we not supposed to reveal the sector?
I think we could say the sector, but that's, I'm low in the totem pole here.
Healthcare,
it's out of the bag. So we're talking about healthcare. And I have a couple more stats that your team gave me on healthcare now that we're out there. Okay. So during the tech crisis, when the S&P was down about 25%, NASDAQ was down much, much more. These stocks were up about 15%. During the financial crisis, 08, 09, when the market got cut in half, these stocks rose 14%. And even jobs too. When the Main Street economy lost 8 million jobs, the sector added nearly 1 million. So you're showing, there's a precedent to this in the past, because the one thing about healthcare, and you could expand on as much more, it doesn't matter if you're in a recession or not. If you're sick, you're sick. And, I was reading a book on the plane, Doc, on this morning, and you're talking about the history of healthcare, saying how miracles take 40 or 50 years. So we can't really grasp it, right? So it takes 40, 50 years for it to happen. And we have genomics, all kinds of stuff going on now. We used to have bloodletting, all kinds of crazy stuff go on. But something bad, like a hurricane, will grab you in a day, the headlines, and think the world's ending. New Orleans will be underwater forever. But good things that are happening in healthcare, we don't grasp because it does take a long time. Why do you think it's so tough for investors to get excited about healthcare like you and I do? Is it because there's a negativity about it, because there's disease and death? I feel like it's always been tough for us to get across to the average person to invest and get excited about healthcare.
Yeah, I think it's really hard to, at least at the level of what you and I call Main Street, to have access to what's going on and to have the knowledge base and understand the basic science and then apply it. You have to have another kind of person that can take and understand finance, and then you have to someone who understands the drug and delivery to the patients. And kind of because I have an MD degree, we've got a guy who's master's in science, we got a guy who's got a master's in econometrics or healthcare in my team. We can kind of put all that together for people and sift it. But I think in general, Wall Street has hidden it, and I think people like to cherry pick. I think they hear a story that this particular drug or this company might go to the moon. They put a lot of money into it. They tell some friends, everyone gets burned because they didn't realize there were 2 other people doing the same technology in clinical trials. And unless you go to those meetings where you hear the doctors and people talking about it, you wouldn't know that you should probably buy all 3 of those companies in equal amounts, that kind of a thing. So I think that's why.
Yeah, I agree with you 100%. And most people that I know that have invested in healthcare have been penny stock biotechs that's going to cure cancer. Right. And they think it's a 2000x winner. And obviously it's not majority of the time. And I agree. I think, I always call it the basket approach. I do this with most of my trends, especially if say it's like CRISPR, genomics, whatever it might be. You buy the basket because I have a feeling, I'm pretty sure that trend's going to come out. Right. I don't know which company will, right. So why not own them all? Because if it does become as big as I think it is and probably as you think it is, all you need is one stock in there. Right. And it's going to make you a lot of money. So So I'm glad we actually agree on this. And we agree a lot of times, but we're definitely on wine and stuff. But other than that, probably not too much. But no, but in all seriousness, how do you see this kind of playing out? Because obviously this is something, as you just mentioned, takes a long time. Are these kind of forever stocks, long term, that you're putting out?
Yeah, I think about it as the 7 that we're recommending as forever stocks. We're obviously, well, not obviously, but we're going to be adding more picks and sort of the standard monthly newsletter advisory that will come out. Some month we might have one that's more in the speculative area. We might have 2, a speculative and a longer buy and hold. The 7 is really like, set it and forget it kind of a business, as we believe. And these other ones are, one of them is going to be, it's a binary. It's either going to happen or not. And if it doesn't happen, it's, the stock's a 0. So we don't want people to put their rent money into it. But we feel pretty good that that it is going to be effective, because one of the major farm players already is giving them money, is already setting up these large milestone payments. So it already feels like, we're seeing the same thing this company is seeing in this technology.
See, I think about healthcare. I think about the next 10 years, let's say. Healthcare is probably the most exciting to me.
I agree.
And I'm far from a medical doctor. I was pre-med for about 6 days, and my football coach said, "What are you thinking?" But I'm fascinated by it. I'd like to read about it. And I can't even fathom in 10 years what even a normal doctor visit will be like,
Right.
A medical visit. And, from prevention, that's a lot of prevention stuff that's involved in there. But going back to the market here before we wrap, Doc, with the bear market we have, the pullback, we talked about how this sector has held up better than the market. But do you see this as, I don't need to necessarily call it a generational opportunity, but an opportunity that we may not see for a long time with these stocks pulling back in the healthcare sector right now?
Yeah, I think so. I think it's most obvious because there's this large group called the baby boomers that are now, the youngest of the baby boomers, maybe 60, 61. So almost all of them now are getting Medicare. Almost all of them have seen, it's kind of the group where in the middle of it, women didn't even know what it was like to sweat or exercise. And discovering that at age 70 and 75, you can actually still lift weights and build strength. And all that group has got a lot of wealth. What are they going to spend it on? And they want to live longer and healthier, what we call increased lifespan, but they want their health span so when they die in their sleep at 90, they don't want to be sick to 85 and in a nursing home for 5 years. They want to be healthy, health span to 90. Yep. And so expanding that health span is this sector.
I see it firsthand being in Delray and South Florida. I mean, I look around and I see some of these people, 60, 70 years old, and these guys look like they're 35. Right. I mean, it's about being active, getting up, moving every day. I make sure I do my 10,000 steps a day, whether it's walking or running on the beach. And but a lot of the stuff that you talk about will push you to do that because you're held accountable suddenly. Right. You can't sneak that because this thing's in a buzz and tell you, hey, what the hell are you doing?
Right, exactly.
Yeah. I'm so excited about it. I'm so excited for this new product to come out. I mean, I know we weren't supposed to talk about it too much, but we had to get into the healthcare. And, you have Tom Carroll, John Engel with you, 2 great analysts here at Stansberry. So putting 3 great minds together. I haven't been this excited about a new product in a long time. So I can't wait. But all right, Doc, before I let you go, I have a question I'm asking all my guests that come on. I call it the island stock. If I were to transport you to an island right now, you and your family down there for 10 years, what is the one stock, the one investment, the one asset that you'd invest in so when you come back in 10 years, you're set?
Let's see. Well, the stock, I would do a stock of Eifrig wine. I could bring a case of my wine and drink. That's probably not the answer you're looking for. I mean, it's got to be in the healthcare sector, and people, they're not going to let me reveal what's in my portfolio. And the truth is, and I know it's a hypothetical question. The risk is I share it, then people go and invest on it, and I don't want people to do that. But let's see. I can say I'd better not. I'd rather not. Yeah,
but healthcare stuff. You think
healthcare.
10 years from now, healthcare. We beat this horse. We talked about how in 10 years where it's going to be for that.
Yeah, absolutely.
So what about a case of Eifrig though, and we put it away in 10 years what it's worth?
Early on, I asked friends of mine. He is now CEO, president of Opus One, so famous big deal winery. Her husband, I'm probably better friends with her now. And I asked them both. I said, hey, when I was first doing this, how many cases of wine would you put away? And she said, oh my goodness, like absolutely just, one or two, you're going to have tons of great vintages. You're going to end up with this full room. He, on the other hand, said, oh, you got to put 5 or 6 or 7 away cases because you never know which one of those vintages will really be great. So I listened to her advice on my first few years. So I only have like 5 bottles of this 09. Wow. But her point was like, Doc, have you seen, and they have 2 separate wine cellars at their place in Napa. Have you seen his wine cellar? He doesn't even know where anything is. So it doesn't even matter if he's got great wine in there. You can't get to it. So I've had a couple of vintages where I have, still have 2 or 3 cases left, but sadly that 09, it was
but you have to enjoy it along the way. That's the other
absolutely
thing.
will.
And I know you enjoy every sip of it.
Yeah.
And I know that case won't last you very long on that island. So
No.
you better have a good healthcare stock to pay for it then. All right, Doc, thank you so much for joining us today. We'll have you back soon.
Thanks, folks. Bye.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.